Staff report.
Hey, good evening, Commissioners. Tonight marks the formal beginning of our 2026 budget process with the presentation of the tax budget. But in many ways, this is not a new conversation. It is an update on a financial story we've been following closely since the adoption of the 2025 budget last fall and our deeper discussion at the Commission retreat this spring.
Can we please have quiet in the room, ma'am? Thank you. Go ahead. Thank you, Kitty.
This presentation will be a bit different than past tax budget presentations, as we are at a critical juncture. Income tax revenue, which is the backbone of our general fund, has flattened. After years of strong growth post-pandemic, the rebound is behind us. From 2021 to 2022, we saw a combined income tax revenue increase of over $9.2 million in those 2 years. But from 2023 through 2025 year to date, that growth has slowed significantly, adding just $3 million in total over that almost 2.5-year period. Again, the prior 2 years was $9 million compared to that $3 million. The combination of permanent changes to remote work tax law, slower wage growth, and broader economic uncertainty has left us more financially exposed. At the same time, the one-time federal relief funds that helped us bridge prior gap with CARES Act funding and American Rescue Plan Act funding are exhausted. Our general fund is under real strain. For 2025, we relied on more than $5 million in American Rescue Plan Act funds to balance the general fund budget. Without those temporary dollars, we would have seen immediate cuts to services. There is no separate rainy day fund to soften these shocks. When income tax declines, the impact is quickly felt in our day-to-day operations. That said, we are not without signs of progress. Our transition to the Regional Income Tax Agency, or RITA, for income tax collection will strengthen compliance and collections. Residential development and economic growth are underway across the city, but these efforts take time to generate sustained recurring revenue. And until they do, we must hold the line on spending, focus on core services, and continue the work of identifying efficiencies wherever possible. The tax budget provides an early look at our revenue outlook for 2026. Slide. It is. Yeah, thank you. So this next slide just depicts our timeline for the budget. So beginning in April and May, we are looking at revenues, which is the tax budget that Commission must adopt by July 15th. And then going into the coming months throughout July, August, September, October, we are having those internal meetings with departments. They are submitting their budget request for their expenditure budget. Again, tonight we're talking revenues. We are required by November 1st to have the city manager's preliminary budget on file. That is per our charter. And then in mid-November, we are having those open to the public meetings with Commission for 2 evenings in November to discuss the budget for the following year. In early December, we have a hearing similar to this for the public to discuss the 2026 budget. In mid-December, we're bringing back that appropriation ordinance, which is the expenditure budget for the following year. And then, as I mentioned, at retreat in the following year in the early spring, which we just had for discussion of the 2025 budget, we are doing that retreat update and forecasting out 3 years. Move to this next slide. So again, tonight we're talking revenues. The tax budget is a revenue document. So you may be asking yourself again why we're estimating 2026 revenues in June. Again, that is because we are required by Ohio Revised Code to have this on file by July 15th of each year. So the tax budget serves 3 purposes. It establishes or requests millage for real estate tax collections, which I'll discuss on the next slide. It establishes the base of revenue estimates for the upcoming budget year. And it combines estimated revenues and estimates with our end-of-year cash, establishing the maximum appropriation capacity in the upcoming appropriation budget. Essentially what that means is this revenue document sets our expenditure appropriations that we bring back to you at the end of the year. For those expenses, we cannot exceed the revenues that we are projecting and that you are approving tonight within the tax budget. So again, for the general fund, the main dominant source of revenue is income tax. However, the city does receive real estate taxes for a few specific or earmarked purposes. The special police levy is a 3 mills levy, generates a little over $3 million and funds part of our police operations. So for perspective, with that $3 million, police's overall operating budget is just over $20 million. So the majority of that is funded by the general fund. Police and fire pension at 0.6 mills is just an old police and fire pension debt fund. And then the Conservancy District at 0.4 mills is simply just a pass-through to the Conservancy District. You'll notice at the bottom here that the 2025 total assessed valuations are at $1.026 billion. That number is up about $14 million compared to 2024. Moving on to the next slide, we'll look at general fund estimated revenues. Our reliance on income tax as the city's primary revenue source continues to grow. It is now up to 81% of general fund revenues. When we presented the tax budget this time last year, we assumed a 3.5% increase in income tax for 2025. Today, we're tracking flat at 0% and have already seen 2 months of year-over-year decline out of the first 5 full months of the year. That level of decline hasn't occurred since the early days of the COVID shutdown, and before that, not since prior to the passage of the 0.4% income tax levy. For 2026, we're projecting a cautious 2.5% increase. For comparative purposes, each percent equals roughly $500,000. That projection reflects cautious optimism, a hope that we begin to see a balance between ongoing economic uncertainty, signs of local growth, and the positive impact of our transition to RETA and their enhanced collection efforts with our income tax. Interest remains a flat 2% of the general fund budget. Fines, licenses, and charges is at 6%, which remains comparative to prior years. This includes things like building permits and municipal court fines. Other shared taxes, which is at $100,000 or less than 1% of the general fund budget, includes liquor and cigarette tax, which remains relatively flat. The local government fund, so at its highest, combined with the estate tax, generated over $5 million annually and accounted for over 10% of our revenue in the general fund. That percentage is now at 3%. So the city continues to advocate for the full restoration of the local government fund, as that would decrease our reliance on income tax revenue. All other includes reimbursements from other funds back to the general fund for administrative services provided to other funds. So this includes reimbursements from funds where ratepayers are paying for services, like our water and sewer fund. And then some of the grant funds that we received, we've talked a lot about the Community Development Block Grant and those HUD dollars for reimbursement to the general fund for those staff hours from those grant funds. So as part of our tax budget process, we also evaluate projected expenditures for the upcoming year. Typically, that starts with the current year's budget and factors in known cost increases. But if we were to follow that standard approach for 2026, we'd be staring down a projected deficit of $4.7 million in 2026. That's simply not an option. We've already taken some cost-saving steps. More than $3 million in cuts have been made to the 2025 budget, reductions that are being felt across departments. But that won't be enough. Additional cuts will follow as we prepare the full 2026 expense budget, and that will reshape how we operate. The 2026 tax budget reflects that fiscal reality. Instead of projecting $63.4 million in general fund expenditures, we've reduced that to $58.9 million. These are not minor adjustments. They are strategic, necessary actions to ensure we can preserve the most essential services. The path ahead requires continued discipline, prioritization, and a clear focus on protecting core services for our residents who depend on them. On this next slide for major operating and capital funds, as you've already seen on the real estate taxes slide, the special police levy includes the property tax amount along with the subsidy from the general fund to support that fund. at 2% of our overall major operating and capital funds revenue, which totaled just shy of $131 million. Utility funds include charges for services for water, sewer, and stormwater. This is up 8% or $2.6 million compared to the prior year due to legislated rate increases. The street fund, which is mainly gasoline tax, funds our streets and traffic divisions, represents $4.6 million roughly, or 4% of that overall revenue. The permanent improvement fund is supported by 10% of every income tax dollar, with the remaining 90% going to the general fund. So in past years, we've supplemented this fund substantially from the general fund with an additional transfer in order for us to support critical capital improvement. That is not reflected in this year's tax budget for 2026. This is one of the several intentional reductions made to help close the general fund gap and focus our limited resources on sustaining essential operations. The general fund projected at $58,683,783. The total for major operating funds to nearly the $131 million, as I already stated. In 2024, just to note, we moved the budget for the fire division from the general fund to entirely in that fire division service enhancement fund that you see on the screen. $15.7 million of the $58.7 million in general fund revenues. Of that, $19.3 million that's up there for the fire division service enhancement fund. 15.7 is a subsidy transfer of that 19.3 from the general fund to support the fire division service enhancement fund. So this is our last slide, and it highlights how deeply the city depends on income tax revenue to fund general fund operations. For 2026, income tax again makes up approximately 80.83% of our general fund revenue. And just a few important notes to help explain some fluctuations in this chart for context. So looking at 2025, this includes a one-time accounting shift due to our transition to the Regional Income Tax Agency. Because we operate on a cash basis, income tax collected in December will now be recorded in January of the following year. We would have previously recorded that in December. So only 11 months of collections appear in 2025. This makes the increase look larger than the 2.5% increase that we're projecting in income tax revenue in 2026. However, that is because 2026 reflects a full 12-month cycle. While the transition to RETA means that 2025 will only reflect those 11 months of income tax revenue due to cash basis accounting and timing of the December receipts, we believe that this was the right and necessary move for the city. The change was not made lightly, as we've discussed. Partnering with RETA ensures we are fully compliant with our income tax ordinance and helps us maximize collections, making sure the city receives every income tax dollar that it is owed. And that's the revenue that allows us to carry out those core services that our community relies on every day. 2024, the anomaly here is that one-time American Rescue Plan Act revenue replacement dollars of roughly $5 million. It throws off that percentage a bit. 2023 reflects reimbursements related to grants that we received for the National Advanced Air Mobility Center of Excellence project out at the airport. And then 2020 was bolstered by some of those COVID CARES Act dollar salary reimbursement. So despite those one-time impacts, the message remains the same. Income tax is our primary revenue source, and the city's financial stability is directly tied to its performance. Again, just reflecting that we're truly grateful, and we'd be in a much dire situation if not for the residents of Springfield for renewing the 0.4% income tax levy. It continues to make core services like police, fire, EMS, street maintenance, thinking of our neighborhood streets paving program, and community development possible. You'll also see on tonight's agenda a supplemental appropriation item that reflects the more than $3 million in budget reductions already made in 2025 that I brought up at the beginning of the presentation. These reductions are not temporary. They're part of a broader shift in how we allocate limited resources to preserve essential services. So the path forward is clear. We must continue to approach the budget season with discipline, focus, and a deep commitment to protecting what matters most. We'll return in November with a full budget proposal for 2026. It'll be our expenditure budget and an update on revenues. And that will be centered on fiscal responsibility, sustainability of essential services, and our continued commitment to move Springfield forward together. And with that concludes
So,
the presentation. I'll take any questions.
Where are we in comparison to other legacy cities in Ohio with similar population scope?
Certainly, Mayor. So communities across the state of Ohio are feeling the reduction in income tax revenue. RETA serves over 400 member municipalities. And for the first time this past quarter, they sent out a notice to all members that they are noticing a trend and a decline in the collection of income tax revenue. There was a recent survey that was conducted among city managers, and cities like Dayton, for example, a 4.5% decrease in income tax revenue. Troy has a decrease in income tax revenue. A lot of the surrounding communities are seeing declines in income tax revenue just simply due to the economic climate.
This is why you'll hear sometimes we'll talk about, we go to the state level and go to the state house and talk about, kind of speaking against unfunded mandates and things that could bankrupt the city. These are unfunded mandates or things that are handed down by state legislators to municipalities that they must pay for, basically, and very difficult to comply with those and to take care of those. You also mentioned, I think we've looked at things with discipline and with scrutiny over time. We're just, when you're facing this type of reduction, you have to be more vigilant in looking at these numbers, correct?
Certainly, I think there's a balance in when I say we don't have a rainy day fund and looking at our ending cash balances for the end of the year. There's also something to be said in investing those dollars back into the community, which we have certainly done in conjunction with those American Rescue Plan Act dollars. So there's something to be said for sitting on a larger reserve balance versus investing those dollars back into the community. And certainly seeing over the past several years from the last recession where we weren't able to make capital improvements that became dire and necessary, we have been able to invest back into those projects. It's just now we find ourselves pumping the brakes a bit and holding the line and going back to evaluating those core services and how we provide those core services.
So one of the ways we use the American Rescue Act dollars to move forward the community and also not be a future burden on citizens and taxpayers is investing in the 3 firehouses that we're building currently. And this would have turned into something, the firehouses that we've replaced are 50 years or greater old. Is that correct? Each. We dedicated another one today. And so this is, it's just something where that would have been a burden in the future. We would have faced losing firefighters because they didn't want to work in unsafe facilities. We would have been rehabbing facilities that shouldn't be. They should just be torn down like we've done it. So it was a good decision to do that and invest those monies. What was that? What was that number? Is that 18 million? Am I right about that?
With fire for the fire stations, that was just over $17 million. And then in addition for fire, we were able to replace some pumper trucks and invest in some necessary equipment for them as well. With the fire department using those American Rescue Plan Act dollars.
And that's just an example. We used a lot of the departments received enhancements, but that's one of the major ones that would have faced taxpayers. Other comments and questions from commissioners? Dr. Estrop?
So essentially what we have here is a situation, and I appreciate you and Ryan and other staff tracking this and bringing this to our attention now, as opposed to waiting and let us get deeper and deeper into debt and the problem. And this is, if you think about it, almost at a personal level. We've got to increase revenue, or we got to decrease expenditures, or we got to do a little of both. That's what it's going to come down to. Increase revenue. And the state has not been helping us there. And I know my friends in the General Assembly will not say kind words about me, but they took away local government fund money, and we've reduced from 6% to 3%. of our budget coming from the state of Ohio through the local government fund problem, or program rather. And then they passed some laws in terms of restricting who we collected income tax money for. So the state has not helped with this problem. Not at all on the revenue side. On the expenditure side, we've all paid the price for high prices in our streets, equipment we buy, everything. So now we're going to have to cut back. And again, I appreciate you bringing this to us now so we can act on it. And then as we put together the budget for FY26, which will kick off January 1st, we can have a budget that we can live with and not bankrupt this city. I also want to make one other point. Were it not for the people of Springfield approving the income tax levy, we wouldn't be even here today. We would have been bankrupt some time ago. So to the citizens of Springfield who voted for that, all I can say is thank you. We've been able to improve service, both efficiency and effectiveness in this city, and we owe it all to you and your willingness to stand up for this city. Thank you very much.
Your comments from the audience on this hearing only? Is there a motion to conclude this hearing?
So moved.
It's been moved and seconded. Clerk, call the roll.
Mrs. Brown,
Yes.
Dr. Estrop,
Yes.
Mrs. Houston,
Yes.
Mrs. Tackett,
Yes.
Mr. Rue.
Yes.